welcome back to the Don and Gino Real Estate and Finance Show right here in your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Super excited to have you back to the Don and Gino Real Estate and Finance Show every Saturday, 9 a.m. to 10 a.m. right here in your hometown station, AM 1220 KHTS and 98.1 FM. That's right, we're twice as good as before. And you can go to donandgino.com where we have all our shows waiting for you. We YouTube these babies. That way you can reference them at any time. We also have the National Real Estate Cafe where daily we give you a 3 to 4 minute update what's really happening in the real estate and financial markets, because the media sometimes are just trying to attract your eyeballs to sell you something. But we actually break down the real numbers and tell you, are we heading into a housing bubble? No, and here's why. And just so you know, if you're worried about the real estate market, you shouldn't be. The real estate market is great. We still don't have enough inventory. Remember, nobody built homes for 10 years. And I believe all of you out there were still making babies. And we have the millennials coming in line, so the real estate market is fine. We're just going through a transition of an overheated market due to 10 years of pent-up demand, and now we have it moving to what's called a normal market. We haven't had one of those in 2 decades. Yep, you're not going to recognize it, which means sellers and buyers actually negotiate on the true value of the home, heaven forbid. So the market is good. Reach out to your real estate professional. Reach out to us, donandgino@gmail.com. We're at Finance America. We have every product available. You go to online lender. Believe it or not, you go to that something mortgage, Rocket something, and believe it or not, when you put it in your application and you think, oh, these guys are great, look how easy it is. Believe it or not, about 7% of those things go through. That's about it. What happens to the 93% of you that didn't get the product you thought you were getting? Well, you should reach out to us at financeamerica.com. You can go to santacretahomeloan.com or look us at financeamerica.com. We have a great team here. So, speaking of a great team, we brought 2 extraordinary experts in the field of reverse mortgages. And this is an imperative thing for you to listen to for you, your parents, or your grandparents, especially if they're trying to figure out how to retire, or how to pay their bills, or how to survive. Because they're not doing it on Social Security in most cases. These 2 guys, Mr. Joe Rinner, Director of Reverse Mortgages for Finance America, is back.
I'm back. We're excited to be on the show. You know, I think so many people have a misconception about what a reverse mortgage is, what it does, and so we want to clarify some of those things and really talk about who qualifies, how does it work, how can they take advantage of this and implement it into retirement planning.
I love that. How does it work? What does it mean? Because a lot of you do not understand it. Trust me. I know you just like, oh, they're just taking my home. Nope, that's not how it works. And then we have even more expertise with us on this show. We have Steve Resch. With the VP of Retirement Strategies with Finance America, a financial planner that has vetted this out thoroughly for you and for us. And he's here on the show to help with Joe Rinner explain the advantages of reverse mortgages that can change your life, because it is an investment strategy, right, boys?
Absolutely.
Who wants to jump in?
Definitely can be. I'll start. You know, first and foremost, you know, people always ask, well, who qualifies? How old do I have to be? When can I get started? There's a couple things to consider. One, it's 62 or older, so at least we have one borrower that's age 62. They have to live in the house as their primary residence. Okay, we do entertain people that are less than 62 if they're married, so it's called a non-borrowing spouse, and there's protections.
I've done those before.
Yeah, there's some protections for those people.
Yep.
So we're excited about, you know, that group of people coming forward and talking about, okay, hey, this is my current situation. Either they owe on their house, they don't owe on their house. They're looking for some type of strategy where they can incorporate home equity into a plan, and they approach us. And so how a reverse mortgage works is they would inquire based on their age, okay, current interest rates, and the home value. They qualify for an amount of money. That amount of money can be used for different funds. Steve, you want to tell them how do they use the funds?
Well, the funds are available to them for many different, there's many different access points. They can have funds available in a line of credit. They can have it available or come to them in a 10-year payment, which would be a payment that they could get for as long as they're living in that home. They could also take some as cash, or they could take a combination of all 3 of those. So whatever option works best for them.
I love that there's options based on their particular scenario, because some may not want the whole lump sum, some will want the whole lump sum. mean, what they decide to do with it with their financial planner.
Right.
We always suggest going to a financial planner to decide
Absolutely.
what you can do with that stuff, because we're not CPAs and
Yeah.
we're not your
Right,
financial planner.
right.
But I love that there's a lot of options.
And another nice thing about the options as well is the client is not stuck with them. So for example, if they chose a 10-year payment where they wanted money coming in every month for the rest of their life, and 5 years down the road they said, I don't need all this, let me reduce the payment. They can do that. It's a very easy process to change it. So their options are flexible right from the beginning.
Go ahead, John.
Yeah, sorry, jump in then. So just to clarify too, those flexible options are on one of our product mixes, and that's typically what we call open-end reverse mortgages or adjustable rate reverse mortgages. And so on the fixed rate option, we give lump sums and we pay off any mortgages that are on the property in first position in either one of those options. So I want to address kind of two things. As you look at a traditional reverse mortgage, there's really two paths. You have a home equity conversion mortgage, which is the government-insured product, and then you have proprietary reverse mortgages. The unique thing about us at Finance of America is we specialize and we're the industry leaders in proprietary reverse mortgage products.
That's true. I love that. I love that.
It's crazy. It's because we listen to our clients. We listen to what their needs are, what they've described to us that they want out of retirement, what they're looking for to do with home equity. And so we've derived a suite of products that are there to take advantage of, and we'd be excited to have you call us and figure out what they are. Steve, looking at the product options and getting into HECM versus the proprietary specifically, and you talk about the line of credit growth, how do they even take advantage of something like that? Do we just give it to them? They just show up and we just give them the product, or how do they get started with
Yeah, the line's
process?
starting out the door if that's the case.
Yeah.
I'm not completely sure I'm following what you're asking. How do they take advantage of it? You mean?
Not from a strategy standpoint, just a fundamental. If I want to get started with a
Okay.
reverse mortgage,
Yes.
what steps
Like
do I
if
have to
they,
take?
like I know they can reach out to Dennis Kotzman here in
Sure.
our office. And by the way, if you want to do that, it's D Kotzman, DKOTZMAN at financeamerica.com, or you can always reach out to Don and Gino at gmail.com. Dennis is well versed in all these options
Right,
as well,
right.
To share with you. But I guess that's
So,
what I guess
okay.
Joe's
Yeah, so-
teed up is. What do they do?
What do they do? So it starts here today. We're doing education,
Right.
And hopefully the listeners are enjoying learning about that the reverse mortgage is not the product of last resort.
Right.
It's not a product where we take your home or
Right.
anything crazy. It's a product that's used for retirement planning
Right.
and to better their situation. So aside from education, what are the steps involved to get to the point to see
Well, then
what do I do?
The first thing they're going to do after that, I would say, is contact Dennis and meet with Dennis and discuss their situation with him. And Dennis is going to be interested in the value of their property, what they may owe on it, and their age. And then he can run numbers and just tell them what they would qualify for, which products make the most sense, whether it be proprietary products or the FHA home equity conversion mortgage products.
Well, I love the detail that is required.
Right.
By the way, just so you know, there's details that are required
Absolutely.
to go through specific on every option, so that in case you maybe don't understand something, it is in detail. And then what's nice is that detail is brought out in black and white to where you can take it to your financial planner
Correct.
or your partner or whoever it is
Right.
and go over those options and find out what's best for you. It is not a one-size-fits-all. They're broken out and like I said, very specific.
Right.
There's not like, there's something hidden. Nothing
Right.
hidden, believe me, it
Right.
can't.
Right.
There's no way for this product to take advantage of anybody over 62. That's not the object. Object is giving them options that they did not have before based on the equity in their home.
Right.
Yeah, absolutely. And that's why counseling was a positive thing. People say, well, why do I have to do counseling? Well, it's to ensure that you understand because the product is so diverse. There's so many options that you could potentially take advantage of. You have a plan. You've talked to someone. You've been educated. If you want to incorporate, whether it's adult children, like you said, or financial planners, or anyone else, we're happy to talk to them because it starts with education. And then, like all mortgage transactions, they apply. And so talking to someone like Dennis is a great idea to get started. If they choose to apply, then we go through a series of things where we order the appraisal. We have to establish that value. We have basic underwriting to make sure that the requirements are met for the product. And then the best part of all is we move to closing and funding, and you get the solution that you're looking for. And so I think it's that simple. People complicate the process to think that there's all these things involved, and why are they involved? It's because we want to ensure that this is a step you're taking to plan. Now, if part of your plan was you didn't have one,
Right.
and it's reactive, that's okay too. Being reactive
Well, they
to
might not even know this was an option.
Exactly.
Like the example I gave in the first segment.
Right.
My neighbors, And they're very educated people. They just didn't know this available
Right.
and thought they had to move from their home that they love. And they're like, I have to downsize to a home I don't want to be in.
Right.
And it's not going to really give us an advantage. That's just so we can eliminate a mortgage payment. Now they got to basically stay in the home that they love, have been in for many years,
Sure.
a dozen years, and now they don't have to leave because now there's an option they didn't know about.
And Don, something really important about reverse mortgage is that they end up following 3 simple rules to the program. Once you have a reverse mortgage, there's just 3 simple things you have to do. First and foremost is live in the property as your primary residence. Okay? Second is to continue to maintain the home as you've done today. Don't let the roof cave in, the windows get broken out, and have the county fall on your house.
You still have the value of what's in the home.
But simple stuff. Those
Right.
those are really easy things. And then the third one is just pay the property charges associated to it. So that involves your property taxes, your homeowner's insurance, any HOA or anything else involved with the
Maintenance
property.
and all that, like you said.
Yeah, let's tune into the next session, and I think we'll
Okay.
cover some more specifics.
Yeah, we're going to talk about how these lines of credit work, again, informing you of the advantages of it. So don't go away. Again, we're here with Joe Rinner, Director of Reverse Mortgage for Finance America, aka the company Gino and I now are part of, and the VP of Retirement Strategies, Mr. Steve Resch. Don't go away. Great stuff ahead. The second half of the show is always the best.